Hi students, can you hear me? Is my voice audible to everybody? From today onwards, I am going to start the CBSE and ISC class 12 accountancy. From that, admission of a partner, accounting treatment of goodwill as per AS26. So in our channel, we are making a separate playlist for this CBSE and ISC and next for the PUC. So today's topic is relating to CBSE and ISC. Let us start. Concept of accounting treatment of goodwill as per AS26. Okay. Adjustment of goodwill as per AS26. The points to be remembered as per the accounting standard 26 are internally generated goodwill. Now the question arises, how many types of goodwills are there? There are two types of goodwill. One is internally generated goodwill, or we call it as a self-generated goodwill. Second one is purchased goodwill. Now we are discussing about the self-generated goodwill or internally generated goodwill. Internally generated goodwill should not be recognized as asset. AS26 is saying that you don't consider the separate self-generated goodwill as an asset because it is not an identifiable resource that is controlled by an enterprise. It is not an identifiable resource because goodwill is an intangible asset. When it is intangible, it cannot be controlled, and also that cannot be measured at a reliable cost. In this paragraph, there are 3 points are there. One is self-generated goodwill should not be recognized as asset. Next reasons are it is not an identifiable resource controlled by an enterprise and it cannot be measured at a reliable cost. I think everybody understanding it. I am simplifying it. One is self-generated goodwill should not be recognized as an asset because it is not an identifiable resource and it is not an identifiable resource controlled by an enterprise that cannot be measured reliable at cost. Hence, this is the theory. Second part is saying relating to accounting of the goodwill. Hence, when the goodwill is evaluated at the time of any changes in the constitution of the firm. What is changes in the constitution of the firm? Change in the relation of the partners. That is by way of admission of a partner, retirement of a partner, death of a partner, and change of profit sharing ratio. These are the examples of constitution of the changes in the constitution of the firm. So in such a cases, the value of the goodwill should not be realized in the books of book firm. Rather, the value of such goodwill adjusted through the concerned partner's capital accounts. They are saying that we should adjust it through the partner's capital account. I think everybody understanding it. So there are two parts. One is how to recognize the internally generated goodwill, whether it should be recognized or not. It should not be recognized as an asset. The reason one is it is not an identifiable resource controlled by an enterprise. Second point is that it cannot be measured at a reliable cost. Okay, let us move on to the practical portion. Concept number 1. Along with me, everybody write it. How the situation is in the problem, the OPSR and NPSR of the not NPSR new partner profit sharing ratio are given. If in the question OPSR and new partner profit sharing ratios are given and new partner bring the cash for goodwill and goodwill amount is retained in the business by the old sacrificed partners. So up to this stage, These lines are explaining the which type of question is it. Question number 1, type number 1, module number 1. What is that? If in the question OPSR and new partner profit sharing ratio are given and the new partner bring the cash for goodwill and that goodwill amount is retained in the business by the old sacrificed partners. Let us start the question. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two partners. One is Mr. A and another one is Mr. B. Sharing profits and losses in the ratio of 3:2. What is their OPSR? That is old profit sharing ratio 3:2. Their balance sheet as on 31st/3/2024 was as follows. Okay. So was word is used. It means that it is a old balance sheet. Balance sheet of Messrs. Mr. A and Mr. B as on 31st/3/2024. You may write it as as at. Draw the format like this. Capital and liabilities, amount rupees, assets, amount rupees. Capital, Mr. A, Mr. B. I am not writing the amount of the capital because our main focus is only on accounting of goodwill as per AS 26. Okay, cash or bank. Are you understanding the question? On 1/4/2024, they admitted Mr. C into the partnership on the following terms. Now we come to the conclusion that this question is relating to admission of a partner. How? The word used is admitted. They admit Mr. C into the partnership on the following terms. Now, who are the old partners? Mr. A and Mr. B. What is the OPSR? 3:2. What is the old balance sheet date? 31st/3/2024. So the date on which new partner is admitted into the partnership firm on 1/4/2024. Who is a new partner? Mr. C. Adjustment number 1. Mr. C should bring in cash rupees 25,000 as his capital. He brought the 25,000 as capital and rupees 15,000 goodwill for 1/5 share in future profit. What is his profit sharing ratio? 1/5. What is his share of goodwill? 15,000. Whether he is bringing the cash for goodwill or not? Yes, he is bringing 15,000 for goodwill. So now the question is that if the new partner bring the cash for goodwill, show the accounting treatment of goodwill as per AS 26 by preparing the partners capital accounts and cash/bank account. So everybody pause the video and note down the question. Are you ready? Let us start the solution. Solution to concept number 1. In order to give the accounting treatment of the goodwill as per AS 26, in case of admission of a partner, working note number 1 is to calculate the sacrifice ratio. WN1, WN means working note number 1, sacrifice ratio. In this question, OPSR of the old partners and new partner PSR are given. So in such a situation, the sacrifice ratio is equals to OPSR. Are you understanding it? Let us move on. Sacrifice ratio is equals to Mr. A ratio Mr. B. Sacrifice ratio is equal to 3:2. This is WN1. Pause the video and note down. Okay. WN2, working note number 2. Accounting treatment of goodwill as per AS 26. Journal. Draw the format like this. Date, particulars, LF, debit, amount rupees, credit, amount rupees. Step number 1. When the new partner bring the cash for goodwill, it is adjusted through the premium for goodwill account. Cash is a asset account, increase in the asset, debit. Cash slash bank account, debit. Because as per American accounting system or an accounting equation approach, cash slash bank account is an asset, increase in the asset, debit. Goodwill amount is 15,000. We don't consider the capital amount because we are focusing only on the accounting treatment of goodwill. Second part is premium for goodwill. Premium for goodwill. Okay. This amount is owed to the partners. Owed to the partners. It is an liability. Increase in the liability, credit. Premium for goodwill. Or you can treat it as an income also. Premium for goodwill. Premium for goodwill. Okay. So cash slash bank account debit to premium for goodwill account. Cash slash bank account debit to premium for goodwill account. Amount is rupees 15,000. When the new partner bring the cash for goodwill, what is the journal entry? Cash slash bank account debit to premium for goodwill account. Okay. In the cash or bank account, you have to write on the debit side as a premium for goodwill. In the premium for goodwill account, you write on the credit side as by cash slash bank account. If in the question it is cash is given, you use the cash account. Or if in the question bank account is given, you use the bank account. Narration. Being cash brought in by Mr. C. Who is that Mr. C? Is a new partner. Being cash brought in by Mr. C for his share of goodwill credited to premium for goodwill account. So when the new partner bring the cash for goodwill, the journal entry is that cash or bank account debit to premium for goodwill account. Being cash brought in by Mr. C for his share of goodwill credited to premium for goodwill account. Step number 2. We have to distribute or apportion this premium for goodwill between or among the sacrificed partners. Now we have to close this premium for goodwill account. In order to close, check it. In the first moment it was credited or debited. In the first moment it was credited. In order to close it, now we have to write debit. Premium for goodwill account debit. Premium for goodwill account debit. Reason is that we are closing this premium for goodwill. Earlier it was credited. In order to close, now we have to debit it. So premium for goodwill account debit, amount 15,000. We are distributing this goodwill to the old partner. Their capital account will increase in the capital, credit to Mr. A's capital account, 15,000 into 3 by 5 in sacrifice ratio. It is 9,000. To Mr. B's capital account, 15,000 into 2 by 5 in sacrifice ratio, 3:2. It is 6,000. So second step is to distribute the premium for goodwill. What is the journal entry? Premium for goodwill account debit 15,000 to Mr. A's capital account 9,000 to Mr. B's capital account 6,000. This is step number 2. In this question, goodwill amount is retained in the business. That's why only you have to pass the 2 entries. One is when the new partner bring the cash for goodwill, entry is that cash slash bank account debit to premium for goodwill account. Second step is to distribute or apportion the goodwill to the old sacrificing partners. The entry is that premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. So pause the video and note down it. Being cash brought in by Mr. C credited to old partners capital account in the sacrifice ratio of 3:2. 3:2. Okay. Pause the video and note down the points. Let us start. Partners capital account. Partners capital account. Draw the format like this. particulars Mr. A, Mr. B, Mr. C. On the credit side, particulars Mr. A, Mr. B and Mr. C. Now, when the new partner bring the cash for goodwill, the journal entry is that cash or bank account debit to premium for goodwill. We are preparing partner's capital account. Okay. Second entry is that premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. Everybody focus on my second journal entry. First journal entry goes to the cash or bank account and premium for goodwill account. Now we are preparing the partner's capital account. Come to the second journal entry, premium for goodwill account debit to partners Mr. A's capital account to Mr. B's capital account. Now we are preparing the partner's capital account. In my second journal entry, Mr. A's capital account and Mr. B's capital accounts are credited. That's why Mr. A's capital account and Mr. B's capital accounts are credited by premium for goodwill account. Premium for goodwill account. Okay. So that's why in the partner's capital account we have to write by premium for goodwill account. Because as per the working note number 2, step number 2 journal entry. In the sacrifice ratio of 3:2. Mr. A 15,000 into 3 by 5. It is 9,000. Mr. B 15,000 into 2 by 5. It is rupees 6,000. Okay. Note down it. Once again I am explaining. We are preparing the partner's capital account. In our second journal entry, partner's capital account is connected with the premium for goodwill. In the second journal entry, partner's capital account is credited. That's why we have to write on the credit side of the Mr. A and Mr. B's capital account by premium for goodwill. This 15,000 is distributed between Mr. A and Mr. B in the sacrifice ratio of 3:2. So I think everybody understanding it. Pause the video and note down it. Next move on to the cash/bank account. To balance brought down. That is from the question old balance sheet. So when the new partner bring the cash for goodwill, what is the entry? Cash/bank account debit to premium for goodwill account. It is as per step number 1, rupees 15,000. Okay. Next you draw the premium for goodwill account. Draw the premium for goodwill account. See, when the new partner bring the cash for goodwill, what is the journal entry? Cash/bank account debit to premium for goodwill account. Two accounts are involved. One is a cash/bank account. It is debited. That's why I am writing on the debit side. Second account is premium for goodwill, but that account is credited. Then in the premium for goodwill account, we have to write on the credit side. What is journal entry? Cash/bank account debit to premium for goodwill account. When you read this entry in the passive manner, premium for goodwill account is credited by cash/bank account. From where I am bringing the amount? It is 15,000. Okay. I have taken this amount 15,000 from this cash account debit to premium for goodwill. Premium for goodwill account is credited by cash account. Okay. Second step is to distribute this goodwill. What is our entry? Premium for goodwill account debit to Mr. A's capital account, that is 15,000 into 3 by 5 in the sacrifice ratio. It amounts to rupees 9,000. To Mr. B's capital account, it is 15,000 into 2 by 5 in the sacrifice ratio. It is 6,000. Now premium for goodwill account is closed because you total it both the side, it is 15,000. Total 15,000, 15,000. Okay. I think everybody understanding it. Now I summarize it. When the new partner bring the cash for goodwill, what is the journal entry? Cash/bank account debit to premium for goodwill. It is active wise. Right in the passive manner, premium for goodwill account is credited by cash or bank account. Step number 1 completed. Step number 2 entry is that premium for goodwill account debit. Premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. You check it. Premium for goodwill account debit side total is 15,000, credit side total is 15,000. This account is tallied, so it will not appear in the new balance sheet. Pause the video and note down. So I brought this 15,000 from this account. Okay. Next. Now I'll show you the summary of the capital account, cash or bank account and premium for goodwill in one place. Partners capital account, Mr. A, Mr. B, Mr. C, particular Mr. A, Mr. B, Mr. C. Cash/bank account, draw the format like this to balance brought down. Next, premium for goodwill account. When we prepare all in one place, how it looks? It looks like this. Start. When the new partner bring the cash for goodwill, what is the journal entry? Cash or bank account debit to premium for goodwill. The working note number 2, step number 1. Amount is 15,000. When you read this entry in the active wise manner, that is cash or bank account debit to premium for goodwill. You read the entry in a passive manner. Premium for goodwill account is credited by cash or bank account. By cash or bank account. It is 15,000 from cash or bank account. Understanding or not? Okay. Second step. Premium for goodwill account debit to Mr. A's capital account. It is 15,000 into 3 by 5. 15,000 is Mr. C's share of goodwill. 3:2 is a sacrifice ratio. So Mr. A's share is 3 by 5. It is 9,000. To Mr. B's capital account. 15,000 into 2 by 5. It is 6,000. Second entry is premium for goodwill account debit to Mr. A's capital account to Mr. B's capital account. When you read this entry in a passive manner, whose accounts are credited? Mr. A's capital account is credited. Mr. B's capital account is credited by premium for goodwill account. Come to the partners capital account. Mr. A's capital account and Mr. B's capital accounts are credited by premium for goodwill account. Amount, it is in the working note number 2, step number 2 entry. In the sacrifice ratio of 3:2. Mr. A 9,000. I brought it from here. Mr. B 6,000. I brought it from here. I think now everybody understanding it. So in the previous slide, I have shown it in a separate manner, like partners capital account different, cash or bank account and premium for goodwill account different slide. Now I merged all the three accounts in one place. I think everybody understanding it in a proper manner. Okay. So instead of that, separate partners capital account and cash or bank account and premium for goodwill separate, you can write in a combined manner. I think everybody understanding it. Pause the video and note down it. Let us move on. So premium for goodwill account, total it 15,000, total it on the credit side 15,000. Now premium for goodwill account is tallied and it will not appear in the new balance sheet. New balance sheet of Messrs. Mr. A and Mr. B and Mr. C. As on 1/4/2024. Sorry. Draw the balance sheet like this. Capital and liabilities. Amount rupees. Assets amount rupees. Format ready. Capital Mr. A, Mr. B, Mr. C. Earlier there were two partners, Mr. A and Mr. B. Now there are three partners, Mr. A, Mr. B and Mr. C. And we are not focusing on the capital, we are focusing only on the goodwill. Cash/bank account, this account will change and capital account will also change, but goodwill will not appear in the balance sheet. Okay. Dear students, if it is useful to you, like it and subscribe and share it to your friends. If you have any doubt, please mention your name, your college name, city and your question. In the next video, I'll rectify that mistake. If any mistake is there or if any doubt is there, I'll clear it. Okay. We have two channels. One is Bhagyavadi Commerce Foundation in the YouTube channel. That is in English as well as Kannada and English. This is Concept 60 Plus. It's completely in English. Okay. So we have a separate playlist. Don't confuse. One is for PUC2. The accounting treatment for good is different there. And second playlist for CBSE and ISC. Okay. So share your comments. Either it may be positive or negative. If it is a negative, I'll change it. If it is positive, we'll move on. Okay. Thank you.